Okay, we're looking at just the rough work for cash flow statements. I'm going to lay it out and exactly what might be involved. So here on the right hand side I have my standard rough work document. So I'm trying to explain what has happened from the opening and closing of my fixed assets, my provision for depreciation, and how did I work out my profit and loss and disposal. The second part of it is I'm looking at my expenses, dividends, taxation. Um, I might have maybe interest received. I could have. I will have probably interest expenses as well. I'm looking to explain how much money was actually paid for it, and I'll need to take into account what we're charged this year and how much we owed at the beginning of the end. So let's go and start with the fixed assets. So we have land and buildings as the first fixed asset, and then we have machinery. Provision for depreciation for the two, so land and buildings and machinery. And then there will be a disposal some stage during the year. So 2012, our opening figure for land and buildings was 825. At the end, we have a closing figure of 900. So the only things that could have happened during the year, I could have bought new fixed assets. I could have sold some of our fixed assets, some of the 825, and I could have revalued. And all of those three together will explain my closing balance. Now, usually I'm going to be given two of these numbers, and the third one I'll work out by deduction. Okay. Machinery, same story. I'll lay this out. So 2012 is 495. That's the opening figure. And the closing figure is 420. So obviously we sold some. Maybe we did buy some as well, but we definitely sold some. So no disposal building during the year, but new buildings required. So our disposal then for buildings is 0. I'm looking for a revaluation down here in my balance sheet. I don't see any revaluation, so that means no revaluation of buildings happened either. So that means 825 take away from 900. So the 75 grand was spent buying fixed assets. Machinery. So just quickly check. No purchase of machinery. Machinery was disposed of for 30 grand. Okay, so I disposed of machinery for 30 grand. That doesn't mean that 30 grand is what goes in here to disposal, but we will work that out when we do our disposal account. So the trade-in, or the money we got for selling our machine, is going to be the 30 grand that goes there. So machinery, and I'll need to work out what was the provision for depreciation and what did the machine originally cost, and I'll work that out as we go along. Depreciation charge for the year of machinery was 40 grand. So that means that provision for depreciation of machinery, so disposal, is 40 grand. So if I put in my provisions, so I have 50 and 70 for the land and buildings. And my machinery, I have 270 and 250. No, it's around 250 and 270. Okay, so we can't have a revaluation on machinery, not possible. We had no no purchase of machinery during the year, so we didn't buy anything. So that means that 495, take away that, means that the disposal, the machine that I got rid of, originally cost me 75. So that goes in here to my disposal account, so you got 75 there. Now, okay, we'll need to work out now our profit and loss and disposal, so we go through that now. So, no purchase machinery was disposed of for 30. Depreciation machinery was 40 grand. So if I go back to my provision for 40 grand. So in my machinery, I have no revaluation of machinery. This is the provision for depreciation account. That means the thing that originally, my original provision was 250. I took away 40 for the one that I got rid of. Sorry, where's it now? Is that correct? Machines depreciation for the year arriving operating profit. So that's depreciation expense is 40. So that's a plus figure. So that means my provision for depreciation at the end of the year should be to 90, but it's 40. So therefore there was 20 grand provision written off over the years on the thing that I got rid of. So that means the 20 grand goes in there. So the net book value in the thing I got rid of was 55. I traded in, I got 30 for it, so I made a loss of 25. Back up to land and buildings, no disposal, new buildings were required. So there was no disposal, so therefore nothing was taken out of the provision account. Depreciation expense is, oh, I see, I just mixed these numbers up. Yeah, and so that 20 should be there and the 40 should be there, but we still end up with the correct figure. The depreciation expense for charge for the year, if my opening is 50 and I had no disposal and I had no revaluation, my closing is 70, that means my depreciation expense must be 20. Okay, so that's all the rough work done. So this is going to go into the purchase of fixed assets investment section. These two here are going to be added together. So you get 40 grand is going to be put into the working out the cash from operations, and this here is going to go in as a non-cash income cash from operations. Down to this here. So my taxation. So I'm looking over here at my current liabilities. So my tax due at the beginning was 775 and at the end was 80. So my due was 75 and the closing due was 80. So we had 75 that we owed. We were charged up here 45 and we owe 80 at the end. So if we just take the 80 away, so the amount paid, we should have paid during the year 75 and 45, that's 120. We still owe 80, so 120 take away 80 means we paid 40 this year. Interest expense, something similar. Do we owe interest? We owed no interest at the beginning, and at the end we owe 3 grand interest. So we should be able to work out our interest charge. We're told up here the interest is 16 grand. So that means we owed nothing. We were charged an extra 16, so we should have paid a total of 16. We still owe 3, so therefore we paid 13. Dividends. There's no mention here of dividends paid, so therefore the amount that we're charged is the amount that we paid, and it says dividend paid is 60, so 60 goes there, and 60 is the amount paid. The only other thing I quickly look at is see, was there any interest that we could have received? And I see we have quoted investments at cost. We don't have fixed interest investments, so there was no interest due or that should have been paid, so that doesn't go in at all. So that's the rough work. That's how you do the rough work. So you get the numbers then, these numbers highlighted in black, which are the numbers then that will go into our the different sections of our cash flow statement.